Well, the rally is continuing and Australia is finally playing a bit of catch up. Hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 12th of December. Yes, it's the 12th of December already, almost the end of the year. And before I get into the session, you do need to be aware that what I say is general advice only, and you have to consider whether it's appropriate for yourself. So, yes, we've seen the rally continue. Yes, everything's continuing to grind higher, but it's been on the back of expected drops in inflation. It's been on the back of falling bond yields. It's been on the back of expected cuts in interest rates in 2024. Now, all of this sort of narrative around peak rates, around falling inflation, that's going to face a major test over the next 48 hours. Tonight, we've got US CPI data or inflation data for November. That's going to come out right around midnight. And then tomorrow night, we've got the Federal Reserve meeting for December, the last Federal Reserve meeting for the year. CPI, they want to see it come down. I mean, everyone wants to see it come down. It's expected to be broadly in line with October's numbers. Core CPI is expected to sit around 4% year on year, the exact same as it came out in October. Headline CPI is expected to dip slightly, I think, to around 3.1% from 3.2% in October. So overall, yes, it's good that it's coming down, but those numbers do look a little bit sticky. So hopefully they do come in slightly lower than expected. And if that's the case, I think we'll see markets continue higher from here. Where if they're worse than expected or stronger than expected, I think that we'll see markets come off a bit. And if they're in line, it's a little hard to say what's going to happen. So after that CPI reading, we will get the Federal Reserve meeting on Wednesday night or early Thursday morning. And the Fed's probably going to remain fairly hawkish in their language. They're probably going to continue to say, well, we might need to do another rate rise if the data worsens or something like that. But I think ultimately, they're going to follow the bond market. They're going to follow the data. They're going to follow what, the sentiment around the world is. And, the sentiment is starting to show that people think rates are at their peak. So these two events, I think, are the big challenge that this current bullish rally is going to face. If it is going to sort of turn, if the bullish momentum is going to shift to bearish, these are the events that'll do it. The Federal Reserve meeting will be heavily informed by the CPI data tonight. So Wednesday's Fed meeting will be heavily informed by tonight's CPI data. And really it's the biggest sort of event we've had for the past month or so. So, these data points or, the data in the meeting will be the determining factor as to whether we finish the year higher or lower than the current levels for, the Australian and US markets. Moving on to the Australian market, we did underperform dramatically in November. I think the US markets were up about 10% on average in November. Our market was about half that, I believe. Now, we have played a little bit of catch up over the start of December. I think we've sort of slightly outperformed the US markets. We've kept rising as they've sort of drifted slightly more sideways to higher. And I'm not surprised by that at all. Overall, there's been a lot of negative Nellies, a lot of skittish Australian investors, a lot of short sold stock on our market. We talked about that last week, and we started to see those shorts be closed, which pushes the market up. We've started to see some of the skittishness finally start to ease, and we've seen some money come back into the market, helping to push it up a little bit. It is really funny, I think, for our market. It is always the most reluctant latest buyer, the most reluctant, people to join in the rally. It seems like sometimes we need a sort of universal alignment of stars until we do decide to rally. But I think it also points to that, there are a lot of short negative Nellies on our market, and usually when they're most negative, the market is most likely to rise. And that's what we saw with the movements across the past fortnight. When short interest was at its highest, that's when we saw our market start to enjoy its strongest upwards movement. So that short interest has started to be closed. We have played a bit of catch up. We have returned to just above 7,200 on the XJO, well above where we spent the majority of October, and finally starting to see a bit of upwards movement. Whether or not we continue again will come down to the US markets and the events of the next sort of 48 hours. So we'll be watching those CPI readings closely. That Fed meeting we'll be watching closely. And we're waiting to see if we've got the green light to continue rising to enjoy a bullish end of the year. So finally, I want to talk about the weird of the week. And the weird of the week is a Fortescue presentation. Well, it's actually a presentation from Andrew Twiggy Forrest, who delivered this speech to a non-business setting, but it was later published on the ASX data releases for his company Fortescue. And so I think the best thing to do is simply just run through some of the slides of this presentation, which was released as an official Fortescue ASX release. And we'll just quickly run through it now. Lethal humidity, it's going to be the next global pandemic. Healthcare systems are straining and that they'll fail. There's no cure for it. There are severe negative effects on the body. And, it basically talks about the severity of lethal humidity, how it's going to, essentially cook our body from the inside out, and basically lead to severe negative public health consequences. It is a very, very strange release for a big mining stock to release to the market. And so it is a little bit odd that, this was put out as an official ASX release from Fortescue. I thought it'd be a weird for the week. I will, however, mention that it wasn't actually released this week. It was released a few months ago. So why did I bring it up this week? Well, anecdotally, Twiggy was right. It's been 80 to 90% humidity in Melbourne for the past week, and it has been unbearable. I really am struggling. Now, I certainly haven't suffered the severe negative health effects that this presentation would suggest, but it hasn't been very fun either. So Twiggy, I'm with you on this one. We really need to start considering the severe consequences of high humidity and whether or not we can sort of improve health outcomes ahead of time before it hits, because I can tell you it's been a very, very rough week for humidity here in Melbourne. So that aside, let's have a look at the charts, and this is the ASX, the top 200 stocks on the Australian market, and we can see it's continued the rally that it started at the start of November. We were a bit reluctant throughout the middle of November, but we started to play a bit of catch up in early December across the past week. This is sort of what I talked about a little bit last week, is we're so negative that we don't believe the rally is going to continue. We don't believe everywhere else is going to keep grinding higher. We sort of don't really believe it. And then eventually we just have a 150 point day out of nowhere. And I think it does point to a little bit of silliness from our market. A little bit of, indecisiveness. And it'd be much more, I think, applicable for us to sort of gradually rise with everyone else rather than disbelieve it, and then finally capitulate and jump higher. Regardless, though, that's what we tend to do. So we had that big day. We sort of drifted a little bit higher since then. And now we're sort of sitting right above 7,200, but below the sort of peaks from, September. So we're looking at those levels as a potential next upside target, somewhere from about 7,280 to 7,320. And like I said, we'll only really get there if we see some positive events from the US over the next 48 hours. And those will be the CPI data tonight and then the Fed meeting tomorrow. For this rally to continue, we want lower than expected US CPI growth. We want core CPI to come down below 4%. And if that's the case, I suspect we'll be finishing the year somewhere above 7,300. For the US market, this is the S&P 500. Their largest index, it's got 500 of their largest listed companies, and they're basically trading at yearly highs. They did eclipse the high from July, broke above 4,600, and now you have to go back to about 2022 to see what levels they might stall out at. And back in 2022, they found resistance around 4,640, so that'll be their next target to the upside. Like I said, with our own market, whether this rally continues or not is going to come down to that CPI reading tonight and that Fed meeting tomorrow night. If they do have a really good result, so lower than expected CPI, I suspect we could see their markets head back towards all-time highs, which would be 4,800 on the S&P 500. Alright guys, so that's it for this week. Hopefully you enjoyed. Hopefully you're not struggling under high humidity out there, and I'll see you guys in the next one.